welcome to another edition of a 3-Point Perspective. Today I'm sitting down here with a good friend and colleague of mine, Brad Graham. He's one of the partners here at 3-Point Capital and is also our Chief Credit Officer. Welcome to the show today.
Thanks, Lauren. This is kind of cool for me, new for me too. So.
Yeah. So just want to touch base a little bit about 3-Point and how we're structured and how we look at our cash flow, our portfolio setup, etc. And that's why we brought Brad in today to talk a little bit about that. So 3-Point itself, we've been around for celebrating 30 years this year, which is an incredible milestone in this industry, something that everybody here is extremely proud of. So give us a little insight to 3-Point. And I mean, 94 was our first year, and we've kind of grown to this size now. So fill us in on a little bit of that.
Well, first off, I think 30 years is an amazing milestone for any company to get to.
100%.
For me, I've proudly been here for exactly half of it. This is my 15th year with 3-Point. I came in as part of a succession plan and to help the company move forward. Proudly right now we are sitting at 15 staff. I think the best thing about it is we have 10 out of 15 people have been here for 10 years or more.
That's a huge accomplishment in any industry. Any employer having stability like that is key.
The loyalty of our staff has been the absolute key, not only for the service and relationships on the broker side, but the service and relationships on the investor side. And just to put it into perspective, 4 out of those 15 have been here for all 30 years.
Yeah.
3 out of 4 of those folks are partners, but it just speaks to the longevity and sort of the core values of the company as we've been moving forward.
Because we are really a family here. Like, I mean, I know it's
100%.
I know a lot of people, think of that, but we truly are. We all get along. It's easy to pick up the phone if somebody's having a bad or rough day to cheer them up. I mean, we do treat each other as an extension of our family.
Yeah.
And I mean, you saw that prior too. I mean, yes, you've been here 30 years, but you were also, or 15 years, sorry, but you were also part of the team prior to joining.
Yes, I was fortunate enough to know this company for the, 5 years prior to that, as I was their commercial banker when I was with TD Bank for this company. So that's how I got to know the company, got to respect how it was managed, and that helped with the decision for me to come on board.
Yeah.
So,
I mean, so now you've been here, like I said, 15 years. When you first came in, how did you take a look at the portfolio structure, make some changes to where it is today?
I had to take some time when I first came in to, you want to make sure you're not stepping on toes because you come in with your own ideas. And I also had to learn how to manage a MEC, right? It's substantially different from working at a bank. You have to learn what the key important aspects are for both the brokers and our investors. What are they satisfied with? Through this period of time, we've transitioned out of commercial and are just focusing on residential, which I think has helped make a very stable portfolio, and we have some very satisfied investors because of how we operate.
Right. And I mean, another thing to add to that is part of the way we operate here at 3-Point is that we are solely driven by our relationships with our mortgage brokers across BC, Alberta, and Ontario. We're not consumer focused, so anytime a consumer reaches out to us, as we are, we advertise, like anybody else does, we refer them back to our broker partners, and I think that's key. Yes, we are licensed, and that's part and parcel of being in this space, but we do really emphasize that relationship with our broker partners, which I think is is an anomaly in this space.
Well, on the mortgage side, as you would know, as our broker relations manager, I mean, without our brokers, we're nothing. 100% of our business comes through our broker partners.
Yeah.
And those relationships are beyond key for us.
Yeah.
Even little things, even if we have a borrower that's been with us for a year or two and they need more money or whatever the case may be, we actually refer them back to the originating broker.
Exactly.
We in no way, shape, or form will ever self-broker a deal internally.
Yeah.
So,
and that's been a huge success to us, and kind of pushes us over to where we are now in fund size. Can you talk a little bit about that?
Yeah, we hit the threshold of 200 million this year. We're very proud of that. That definitely doesn't make us the biggest player in the industry, but we are very comfortable with where we're at 200 million. Our goal is to continue positive, controlled growth. It speaks to, we have to listen to feedback from both our board of directors and our investors as we, continue to grow the mortgage fund. But the key for us is we want controlled growth. We're not going to take on undue risk just for the sake of growing. And we just want to make sure that we have a very stable mortgage fund moving forward.
Well, I mean, 30 years is a testament of keeping that steady pace and doing what we are comfortable with and are good at, right?
Absolutely.
That's a big piece of the puzzle for us, and sustainability.
Yeah.
So when it comes to fund size, obviously for you and I, we talk about it along with Tanya, one of our senior underwriters, is cash flow, is managing the daily and monthly flow of business, which directly, affect our cash. And let's talk a little bit about how MICs manage cash flow.
Yeah, well, you probably just hit right into one of the things that I'm passionate about. As you're aware, it was just a couple of years ago, I did a presentation just off the cuff to a mortgage broker group. As opposed to talking about ThreePoint, I talked about how MICs in general manage cash flow, and the reaction from the audience was, wow, they never knew how how a mortgage investment corporation operates.
Right.
So, I mean, first and foremost, there's no such thing as a MIC that has unlimited cash, right?
No.
So every day is cash flow management. We're fortunate, we operate with a line of credit behind the scenes that helps us bridge both the ebbs and flows. But it's not only about mortgage fundings and then mortgages that pay out, it's also managing the expectations of our investors. We have investors that come, we have investors that go.
Right.
So we always need to ensure that we have cash flow available to do what we say we're going to do. We're fortunate. We've never been in a position that we couldn't fund a mortgage that we've committed to, and I would suggest we never want to be in that position.
Exactly.
So, right down to the micro side of it, we manage cash flow the way we do it behind the scenes is in 7-day increments, so basically weekly increments. We know exactly what mortgage funds are going out.
Yeah.
We know what's coming back in. Our investor transactions always happen at the beginning of the month, so that allows us flexibility to manage their expectations. And very fortunately for the last few years, we're definitely having a bigger inflow of investor capital than outflow, so it does make it obviously a lot easier to manage a mortgage fund. We're fortunate that because of the way interest rates went, our return is up, just no different than basically every other mortgage company out there. So cash flow is king,
right,
at the end of the day. And we're fortunate just right now in this point in time, we have lots available. But the one thing you're not going to see us do is change our risk appetite in order just to move that cash out. For us, it's all about, we want to be very consistent and transparent in how we do business and not ebb and flow with cash flow.
Yeah.
So.
And for those watching, one thing that we sort of implemented a couple of years ago is our renewal process, which we're extremely proud of. as far as that's being built into our commitment. So clients know what to expect should they need to renew with ThreePoint. And we're always willing to renew a file, provided the borrower is in good standing with us. And somebody from the team always typically reaches out in that 60-day mark just to say, hey, got a reminder of mutual clients up for renewal. Have you spoken to them on the renewal? Is there a takeout in place, etc.? And that's solely a touch point for us, a reminder for those of you, but it also helps Brad on the cash flow side, because we're expecting a large amount of payouts at renewals. Then that's another influx of cash coming in. Or if we're renewing, then we know we'll take that piece of the pie out, and he adjusts his cash flow analysis for that given month.
100%.
Right?
The one thing I think maybe it's internally, the management team here gets tired of me talking about healthy churn in the portfolio. Because sometimes it's, we've got a whole bunch of payouts, what's going on? And if you see me around the office, I'm the guy going, this is awesome, because I would rather see mortgages pay out. Let's replace them with new mortgages that are valued at today's appraised values. It keeps a healthy portfolio when you're constantly churning over clients. To me, that's the fun part, because it also allows us the cash then to continue to help the brokers that have been supporting us for years.
Exactly.
But back to renewals, one of the things, and I'm sure you keep hearing it, and I know the underwriting team hears it as well, is, I can't speak for everybody else, but we put our renewal fee right in our original commitment.
Yeah.
Our borrower, the broker's clients, our borrowers, know exactly what the renewal fee is going to be up front, and our renewal fee is 0.25%.
Yeah.
Which I believe is considered quite low in industry standards. But our whole focus is transparency.
Yeah.
It's no different than interest rates that we post on our website. We're proud of ourselves because we don't use the term starting at.
Yeah.
Right?
Or as low as.
Or as low as. If the file fits our underwriting program, that's your rate.
Yeah.
It's not, well, we're going to charge an extra half because of X.
Yeah.
No,
That's just not who we are.
that's not who we are. We want to be straightforward. If we say that's what the rate is, that's what the rate is. There's no changing or flip-flopping at the last minute.
Yeah.
And that drives me nuts in this industry when I hear about it. So,
Yeah. Cash flow is obviously is key for us keeping going. Probably the biggest thing that we've seen now in the last 6 months in the industry is obviously interest rates.
yes.
And obviously we've now seen 2 rate reductions since the beginning of the year, which has been great. Some of those changes affect us and some of them don't, just depends on what is moved by the Bank of Canada. Can we talk a little bit about interest rates and how we set them here when announcements are made?
Yeah. Well, one of the misnomers out there that we hear when rates drop, especially on this last drop, is the Bank of Canada rate went down 0.25%. So the question that comes to us is, well, are you dropping your rates 0.25%? Well, the simple answer is no, we are not. Our rates that we charge are not focused on prime. Our line of credit that we pay an interest rate on to our banks that we deal with, yes, that's based on prime.
Right.
But our line of credit only represents a fraction of our mortgage fund. So a reduction in Bank of Canada rate, yes, helps us on our interest that we pay on our line of credit. But again, that's only a fraction of what our total fund is. So we have to, I use the term, and I've used it with you, we walk that tightrope.
Right.
In that we need to ensure that we're competitive within the market. And when I say competitive, that doesn't mean that we need to be the lowest.
No.
I don't want to be the highest. But we want to be competitive for our broker partners because, we want to offer a reasonable rate, very good service, and treat their clients with respect on the end. But on the backside of that is we have to provide a decent return for our investor group, because our investors make up a big percentage of our mortgage fund that we can lend. So we have to ensure that our rate of return is appropriate for them based on their perception of risk of our portfolio. Exactly. So as I say, that, you and I have had a discussion this morning. We have a September Bank of Canada announcement coming up. Flip a coin, we're not sure what it's going to look like right now. But from there, no matter what it is, if it stays the same, that's an easy decision. If they drop it 0.25 or 0.5, then we have decisions to make on what we want to do with our rates. The good news is we don't have to rush and do anything with our rates. There is no timeline.
Exactly.
But I'll back up and say we want to ensure that we're competitive within the market. But I'll never ever say out loud that we're the lowest, because I don't want to be the lowest.
No. And the way we set our expectations to our investors. I mean, just like staff, we have a lot of long-term investors, second and third generation as well, and they have come to appreciate how ThreePoint manages cash, risk, and tolerance for a fund, and that makes it a lot easier for us to retain capital or bring in more capital, which is key.
One of our biggest selling features on the investment side is our overall portfolio loan to value is 54%.
Yeah.
92% of our portfolio is in a first position. We choose to manage the fund that way.
Yeah.
We could definitely, drive more second mortgage business into the mortgage fund to help bolster the return. We choose as a management team not to do that.
Right.
Second mortgages obviously are second mortgages. They carry more risk. You're at the mercy of the first, etc. So when we do a second mortgage, and our broker partners have heard us say this, that we're cautious.
Yeah.
Do we do them? Yes. But do we do them in every instance? No.
Yeah. Well, and a part and parcel too is us turning over that book at renewal also sort of resets our overall portfolio at today's market value. So our portfolio, for the most part, isn't a lagging valuation. It's more of a current as we turn the book, right?
Yeah. Well, I'll actually touch on that, because that is actually an amazing point, in that right now we're in a period of probably, I would say, more than normal payouts.
Right.
But I'll give you a key example is when we see a payout that is a mortgage from early 2022, which everybody knows for the most part across Canada, every region slightly different, was the peak of the market, right? So when we see a payout from early 2022, we're like, yes, because if we ever had a problem with that mortgage, who knows what the valuation would be today versus when we put it on the books 2 years ago.
Exactly.
So you just, as I say, you hit a key when we can reestablish that money at today's values. It doesn't matter whether we think the market's going up or down. At least we've revalued it at today's new valuation when we do a new mortgage. Mm-hmm. And that's all part of risk management. That's why we key on, we use the term diversification internally. With most of our portfolio is either in British Columbia or Ontario.
Right.
But if you look at a market like Ontario, the ability to diversify your mortgages into numerous cities is amazing. We try not to focus just on GTA, for example, or London, or whatever the case may be. Our whole key, and as you know how I like to run the portfolio, is diversify, diversify, diversify. And again, that speaks to risk management and the marketability of those properties.
Yeah.
Because if you ever have a problem, you need to be able to get out of it.
Exactly.
So-
And that's sort of too, when we're looking at whether it's first or more importantly a second, we really evaluate that property that we're looking at. Do we want to be in second position behind, XYZ lender? And more importantly too, if we are going to do that, and brokers have heard us all say it when we're looking at it, is we have to take into consideration that first. How big is that first? Who is it? How is it structured? And does that combination of the first and second fit within our portfolio? Because we're actually, when we're doing a second, looking at it as a first. Knock on wood, if we, hopefully we don't have to, but if we ever had to be in a situation where we had to take control of the property, we got to make sure that we want that property in that size of a situation. So there are a lot of factors kind of going into it. I hope the information that Brad and I talked about today is useful, gives you a little bit of behind the scenes of a MIC and how we operate here. We're extremely humble of our support that we have through our broker channel, but I just want to provide a little insight on TPC today. Brad, I thank you for taking a couple minutes out of the day to sit down with me and educate our partners out there, and we wish everybody continued success for the remainder of 24, and we look at beyond that for continued partnership. So thanks everybody. Thanks Brad.
Thank you,
have a great
everybody.
day.
Take care.